On the 18th of March, 172,433 trades valued at more than 26.1 billion rand were executed on the JSE. That's the highest number of trades seen on a single day in the exchange's 123-year history. Russell Loubser, CEO of the JSE, joins us now to talk us through some of the activity we're seeing on the local market scene. Thanks so much, Russell, for joining us this afternoon. Well, certainly positive stats that are coming to the fore here, where the JSE's latest statistics for March have shown that the number of trades on the equities market was up, 8.2% year on year. We've seen that value of equities also increase by 6% compared to March 2009. So things picking up nicely here and spelling good news for the JSE's revenues moving forward.
Yes, look, we're very thankful for those volumes, but bear in mind March was a closeout month, so you expect it to be high, but it is compared to March last year, and as you remember, March last year were very, very tricky times. Nobody in the world had a clue as to how big this problem was. So it does look as if markets are rebounding, regaining their volumes.
Yeah.
Especially when you take out players like Lehman Brothers, which happened last year. Lehman Brothers was huge. Lehman Brothers went out end of 2008, but that affected volumes in 2009. So when you remove huge players like that, every market suffers that used to have them there. So it's good.
So if we're looking at who's playing in these markets, what are we looking at when we're comparing foreign versus local activity?
Yes, the foreign activity is very important to the JSE. It could be anything between 20 and 30% on a daily basis. And you see it when there's a bank holiday in the United States, our markets are quiet. So very important, and I think the message to remember there is that if we don't provide the service, the quality of service, the corporate governance, the surveillance that goes with that, well, then we can't rely on that foreign participation.
Well, when it comes to services, I mean, the increasing volumes and values traded comes on the back of the JSE's introduction of a new billing system, which came to effect on the 1st of March this year. Run us through that and the impact it's had, because it does aim to incentivize retail investors, right?
Correct. Not only retail investors, also the big investors, because their volume discounts when the big players reach a certain volume, and then anything in excess of that in the same month will get a discount. The other aspect of the new billing model was to more closely align our revenue generating capacity with that of our users. Yeah. So it's more value based. I say more because there's a floor and there's a cap.
Yeah.
So it's not entirely revenue based, whereas previously it was, up until March, it was per transaction.
Yeah. Starting at the beginning of this year, we saw prices increase for your services offered. So by how much did it increase, and what's the expectation for the next year?
How did our costs increase?
Yes, or costs in terms of transactions or your services offered to investors themselves, the cost of those services provided.
Yes, well, we like to stay in very close contact with our users to determine what suits them best and what suits us best at the end of the day. I mean, obviously, some users would prefer that we charge absolutely nothing, and that's impossible.
Some, all.
All. So we stay close to them, and we try and cater for the entire range. You started off by saying the retail, and that's quite correct. We want to encourage the retail, and therefore we dropped whatever the per transaction charge was previously. The floor at the moment is lower than the per transaction charge. Yeah. So that should bring in the retail to a greater degree. But then we also share in the upside to a greater degree if the market trends upwards, which happens to be, fortunately, the situation at the moment.
What's interesting, though, is on the JSE's equity derivatives market, the volumes of futures contracts traded in March was down 10% year on year, but trade on the JSE's non-standardized derivatives instruments, so the can-do futures, grew by 19%. That was off a low base, but what's the signaling in terms of appetite that investors have for derivatives?
Yes, and we watch that one with interest because the derivative market is important to any market. The cash market is crucial, the derivative market very important, and the two complement each other. So thankful for the fact that it's only down 10%, because you remember with Lehman's being taken out in 2008, 2009 volumes were down substantially.
Yeah.
I guess what it says is that the market is still wary, but also then bear in mind that the volatility has come down significantly, and derivatives do come into their own in high volatile times.
Yeah.
So it's a combination of factors. We just have to continue providing that very good service for the standardized stuff, and then what it says on the non-standardized stuff is that those over-the-counter participants recognize the value of an exchange with a clearinghouse stepping in between the two and being the buyer to the seller and the seller to the buyer.
Also the flexibility that comes with that, with the can-do, the flexibility that it offers in terms of over-the-counter contracts.
Yes, it's a tailor-made product, but while it remains an over-the-counter tailor-made product, it means that you've got bilateral credit risk. It means you've got the problem of continual valuation, and you've got the problem of what happens when the value deviates from the original value. And an exchange with a clearinghouse takes care of all of that.
I'm trying to go through all the segments on the JSE here. I mean, the JSE's interest rate market on a year-to-date basis, the bond nominal volumes are 20% down on 2009, spot and 4% down on repos. To what extent have the secondary market volumes in government bonds been impacted by the accelerated issuance we've seen by the National Treasury?
Yes, there's now an anomaly. There's an accelerated issuance. There's big demand for National Treasury stock, and yet the physical trading volumes are down. Should not be. That's the issue that we have to deal with. We've acquired the bond exchange. That doesn't mean to say that we have fixed the interest rate market. The interest rate market is not fixed. It operates. It's not optimal. South Africa deserves better interest rate markets, and that's the issue that we are still debating, discussing, trying to get consensus on with parties, but one cannot talk forever. South Africa deserves better interest rate markets. Simple as that.
On a positive note, though, on a year-to-date basis, foreigners are net buyers at levels almost 5 times those of 2009. So one would assume this is symptomatic of some kind of renewed confidence in the monetary and fiscal policies of the country itself.
That's correct. The yields are good. South Africa is a good credit risk. The quantities are there. It's not surprising that foreigners are flocking to buy our bonds, but we can provide them with we can and should provide them with a better service.
Well, Russell, we're going to have to leave it there. Thanks so much for your time this afternoon. That, of course, Russell Loubser, CEO at the JSE, joining us live in studio.